Hello and welcome to another market update by Market Intel. Today we want to take a look at gold, and I haven't covered gold for a while, so let's take a look at it. If you're interested, feel free to use the link in the description to join for free on our website. The link takes you to dailymarketupdate.com, and if you register here for free, you receive daily free Elliott-Wave updates for all these markets, including gold. So let's take a look at gold today. We want to take a look at the 2-day chart as well as the 4-hour time frame. Let's start on the 2-day chart. I always prefer to start on the longer time frame, so you try to ensure that everybody has a good understanding of the overall context. So it's here on this chart quite interesting to see that the gold market has been quite frustrating for a long time. So you can clearly see that the market has been in this sideways range for quite some time, and a third wave has topped in 2020 at $2,089. That was the top of a larger uptrend, which completed then at this top of a third wave in yellow. A third wave is typically the strongest wave in an uptrend in a 5-wave cycle, which means that after a third wave, typically we see a fourth wave, which is a corrective pattern and often unfolds as a sideways correction. And I think this is precisely what you see right here. It's been a boring sideways correction. Yes, quite volatile, but still mostly sideways oriented for the last few years. So you can see that the market is now basically at this resistance point, resistance level, around $2,089, very close to that previous high from $2,020. It also means that as soon as wave 4 is finished, and we are going to talk about that in a minute, that a fifth wave to the upside should unfold and could complete a long-term uptrend for gold. At the moment, we can see here that the third wave obviously topped, and then after that an A, B, C correction followed. This ABC correction in our primary scenario completed only the larger A wave of this correction. The move to the upside looks fairly corrective. So we are dealing here at the moment most likely with a corrective structure. And our perspective is that the initial move up to the 2089 level here in 2023 was magenta wave W of a larger B wave after the A wave bottomed here end of 2022. A wave down, B wave up, and it contains out of a WXY structure. The Y wave is likely unfolding right now, and we're going to take a look at the detailed wave count in a minute on the 4-hour chart. But B waves are very difficult. We always have to be prepared for wave count changes in corrective patterns. They can happen quite often. But Elliott-Wave allows us to understand, or to get an understanding of a potential roadmap, and also helps us to understand what the next steps are that are expected and can be expected. So after this B wave, once the B wave has topped, and it probably hasn't topped yet, we should see the completion of the fourth wave as soon as this C wave is completed. So it's an A, B, C corrective wave. And the C wave should ideally finish before breaking below 1377, somewhere in this range as well, especially if the B wave finishes above the third wave high. So B waves tend to overshoot. They can, especially in wave 4s, overshoot quite often. And if the B wave overshoots, then we always have to consider that the C wave can possibly end above the A wave. This has to do with a certain relationship that an A wave and a C wave often have. The C wave tends to have the same length as the A wave. Yes, it can be longer as well. Depends a little bit on how high the B wave overshoots then, so that we can determine, once we have a top in place, where the C wave might end. It's a little bit too early for that right now. Looking at the 4-hour chart, you can see here where the magenta X wave completed. That was end of 2023. And now this corrective pattern to the upside in magenta wave Y is currently unfolding. Magenta wave Y seems to unfold itself as a WXY structure. This is a super complex pattern that we see here at the moment. It is also possible in our alternative perspective, which we assign still 40% probabilities, that this B wave actually already topped here at this high in December last year. But it cannot fully be confirmed yet, and the sideways price action here indicates that the market hasn't really fully made up its mind yet. However, if we see a break below 1,935 sooner or later, before going higher, then this would confirm our alternative perspective, and we would make that most likely primary perspective. So don't neglect the alternative wave count. It really depends on if the red support line is holding. At the moment, as I said, in the preferred scenario, in the primary scenario, we should see the price go a little higher to complete this Y wave in the near future. And then this B wave would complete, and we should see this C wave sell-off follow. That's my update about gold. Hope you enjoy the update. Feel free to use the link in the description so you can register for free on the dailymarketupdate.com website. And there you receive free Elliott-Wave updates every single day. Thank you very much. Bye-bye.